Hi everyone. Hi, welcome. Okay, so I see a couple of you guys streaming in. So before we get started, we're just going to give about 3 more minutes to let more people join the session before we get started. So in the meantime, feel free to grab yourselves a drink, make yourselves comfortable. And yeah, I'll see you guys in about 3 more minutes or 2 more minutes actually. Okay, thanks everyone. Let me know in the chat as well if you guys can hear me and see me clearly and can see my slides as well. And yeah, I'll start in about 2 minutes. Thanks, everyone. Okay, let's make sure you guys can see me. Okay, let's go ahead and get started. So, welcome to today's webinar. Today we'll be talking about advanced RSI trading techniques. Um, we're also going to be talking about stochastic techniques as well, because they're pretty similar, and we'll get into those in a bit. Okay, so before we get started, as per usual, a disclaimer and risk warning. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Okay, so let's get started. So I'm Melanie and I'll be your speaker for today. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. We'll go through an intro of RSI as well as stochastic, and then we'll look at the differences between the two. Then we'll look at what exactly are divergences in trading and how you can use them to your advantage in trading. Then we'll combine them together for high probability setups. And if we have a little bit of time at the end, we'll go ahead and take a look at some charts. Okay, so firstly, what is RSI? So RSI is basically relative strength index, and it's a popular technical analysis indicator used in trading to measure the strength of a security's price action over a specified period of time. So it's commonly used to identify potential entry and exit points in the market, and it measures the magnitude of a security's recent price changes to determine whether it is overbought or oversold. So how do you use it? It basically oscillates between 0 and 100, with values above 70 considered overbought and values below 30 considered oversold. When the RSI value is above 70, it suggests that the security may be overvalued, and due for price correction, potentially indicating a sell signal. When the RSI value is below 30, it suggests that the security may be undervalued and due for price rebound, potentially indicating a buy signal. Traders often use the RSI in combination with other technical analysis indicators and fundamental analysis tools, so that they can make informed trading decisions. And it should be noted that no single indicator should be relied upon entirely, as market conditions can change rapidly and unpredictably. Okay, so now let's look at stochastic oscillator. So for stochastic, it consists of two lines that fluctuate between 0 and 100. First line is called the K or percent %K, and it represents the current closing price of the instrument in relation to the high and low prices of a given period. The second line is called D, and it's a moving average of K over a certain number of periods. So the slow stochastic indicator is taken as the 3-period moving average of K. And the difference between the slow and fast oscillator is that the slow, which is the K line, incorporates a period of 3 that controls the internal movement of K. Setting the smoothing period to 1 is equivalent to plotting the fast stochastic oscillator. Okay, so how do you use the stochastic oscillator? So traders use stochastic to identify potential buy and sell signals, similar to RSI. And when K crosses over D, it is considered a buy signal. When K crosses below D, it's considered a sell signal. So traders also look for divergence, which we will get in a bit, between the price of the instrument that's being traded and stochastic, which can indicate a potential trend reversal. So for stochastic, the normal default settings for stochastic are 533. Readings above 80 indicate that the price is near its high and that it's oversold or overbought, sorry, and readings below 20 indicate that the prices are near the lows and are oversold. So I've also included the formula for the stochastic oscillator just for your reference. But typically if you're using MT4 or the trading view, they will do the calculations for you. Okay, so what is the difference between stochastic and RSI? So they're both price momentum oscillators and are both widely used in technical analysis. So while often used in tandem, they each have their own different underlying theories and methods. So the stochastic oscillator is predicted on the assumption that closing prices should move in the same direction as the current trend. Meanwhile, the RSI tracks overbought and oversold levels by measuring the velocity of price movements. So in other words, the RSI was designed to measure the speed of price movements, while the stochastic oscillator works best in consistent trading ranges. But in general, RSI is more useful in trending markets, and stochastic is more useful in sideways or range-bound markets. Okay, so let's take a look at the charts now. So to start off, we have just an example of what an RSI and stochastic looks like on this Euro Aussie chart. Okay, so let's take a look at at our first technique, which is to identify hidden support and hidden resistance levels. So in this example, you can see we've highlighted some areas in which price is giving us a higher high, but on our stochastic, it's showing us the same resistance level throughout. So that's what we call a hidden resistance. Even though there are different levels of the peaks for our price, we see that on stochastic, price is making the same resistance level at 93.52. If we look at a hidden support level, you can see that for price is moving in this ascending trend line. So obviously it's making higher lows. Whereas on our stochastic, there is a really long hidden support level um, that our stochastic is respecting. Okay, so you can see that from our previous example with this hidden support, it basically tells us that price is going to continue moving in this ascending manner. So from where we are at over here, price is touching the trend line. So we're expecting it to continue to go upwards towards our take profit. And you can see from our stochastic that price is, since a hidden resistance or rather hidden support level is at 4.2675, we are also giving us a buy signal that price is going to rise towards our take profit as well. You can see that that's exactly what happened here. Okay, so let's talk a bit about divergence in trading. So this is also a technical analysis concept, and it compares the movement of a securities price as and an indicator, such as an oscillator, to identify potential trend changes. So there are two types of divergences, bullish and bearish divergence. A bullish divergence occurs when the securities price makes a lower low, while the indicator makes a higher low. So this suggests that the downward movement or momentum of the security is losing strength and a potential upward trend may emerge. So you can see on the examples here, okay, we are seeing for regular divergence, when price has made a higher high, but our stochastic or RSI is giving us a lower high that is giving us a bearish divergence. Whereas for bullish, we are looking at the lows or the troughs of the chart. So if we see price making a lower low, but stochastic or RSI indicator is giving us a higher low, then that is a bullish indicator. Okay, so you should typically try to draw out um, the lines connecting the tops and the bottoms, so that's easier for you to see. And we'll show you guys how to do that in a bit. Okay, so bearish divergence, on the other hand, occurs when the securities price makes a higher high, which we mentioned, um, while the indicator makes a lower high. This suggests that the upward momentum of the security is losing strength and a potential downward trend may emerge. So it's important to note that divergence is a potential early warning sign of a trend change, but not a guarantee. So it's important to look at trend lines like we saw in the previous example where it had an ascending trend line as well, or other chart patterns to confirm a divergence signal and make trading decisions, which is why we typically would use both the RSI and stochastic together, just to see if we can have more of a confluence. Okay, so here's our first example. You can see that price is testing a key horizontal resistance level. Okay, with price making a smaller high, resulting in bearish divergence with our RSI. You can see that our descending resistance line on the RSI caught the past two reversals correctly. So it forecasts that we could be seeing a reversal here, um, giving us a bearish divergence. Okay, so this is the outcome of that. You can see that price reversed strongly because of the horizontal resistance and also the RSI resistance and the bearish divergence. And you can see that on the RSI, it has also reversed strongly. Okay, Here's our second example. So you can see here that price is making a higher high, whereas on our stochastic, it is making a lower high. So this is what I mean by highlighting the levels that you're looking at, or the peaks that you're looking at with these vertical lines, and then drawing out whether price has moved upwards or price has moved downwards. So that's a lot easier to see or identify any divergences. Okay, so here we have a very obvious bearish divergence, and you can see here that there is a repeated pattern here. So bearish divergence, price made a higher high, and on our stochastic, it's giving us a lower high. And it is also giving us a hidden resistance level. So with all of those combined, we can predict that price is going to reverse soon. Yeah, it's going to reverse off of a resistance level and hit downwards. And you can see that's what happened here as well. Okay, so next, divergence potential. So you always want to take note of where the bearish divergence starts, as this is the level where it tends to reverse to. So this is also what we call a pullback level. But in this case, since we have a swing high and a swing low that line up in the same area, it is an overlap level. Pullback, which is what I mentioned earlier, is if there is a swing high and then price has surpassed that level and it is we can expect it to U-turn back down and react off of that level again. That is a pullback level. Bearish divergence equals the price is making higher highs, RSI is making lower highs, which is what we mentioned earlier. So you can see price, we identify these two levels here. And we see that price is making a higher high, RSI is making a lower high. And we've highlighted this level at which we are expecting price to return to. And you can see that's exactly what happened, and it reversed to where the divergence started. Okay. Next, let's look at forecasting breakouts. So in this case, the RSI broke the ascending support line before price did. So in this case, we're not really looking for any um, support or resistance levels. Instead, we are looking at identifying trend lines. So if you guys remember, what makes a valid trend line is if there are at least 3 touches on the trend line, and you can see that for price, there are 1, 2, 3, 4 trend line, 4 points on the trend line, whereas our RSI also has a couple of points touching the trend line. So we've identified firstly that there is a bearish divergence. Okay, price has made a higher high, and our RSI has made a lower high. And of course, we also see that RSI broke this ascending support line before the price did. So it forecasts that price might break out of that ascending trend line as well. So point number 2, price is barely breaking out of the ascending support line or ascending trend line, but shows strong recent bearish divergence versus the RSI. So that's what I mean by combining different techniques. So here we have the RSI breakout in combination with a bearish divergence and also with price breaking out of the ascending trend line. So it gives us a high probability that price is going to break out of the ascending trend line and drop. Okay, which you can see is what happened here. Okay, another example here. So in this case, we are looking at a descending trend line. So this isn't really a trend line because there aren't 3 touches on it, but you can see here that price has broken out of the ascending trend line. And in fact, you can see that price, or rather RSI, touches the trend line, but on price, it doesn't touch the trend line. That's also typically a sign that price might break out of the trend line. Okay, so here we also identify that there is a bullish divergence with price making lower lows and RSI making higher lows. By lows we mean like this troughs. Okay, by highs we mean the peaks. So price is now testing the descending resistance line and we're wondering if it's going to break it. So on our RSI we have a descending line breakout. And recent bullish divergence suggests that we could be seeing a strong reversal. So with all of those in combination, you can see that there is a successful breakout of descending resistance line as forecasted by our RSI. Okay, so next our bullish divergence. So you see on the image that I've included here, if you take a look at that and ignore the GIF for a second, you see price moving in a descending trend channel. Okay, so what makes a valid trend channel is if there are two touches on the top and two touches below. So you see that the vertical lines that I've highlighted show us the peaks, or rather the troughs that we're looking at in this case. Price has made a lower low, whereas on our RSI, actually, I think in this case I'm using a stochastic. So you can see on our stochastic that price has made a higher low as indicated by these dotted lines here. Okay. Another supporting factor is this line, this swing high resistance at 1.56099, and that is supported by a projection, Fibonacci projection of 100%. Okay. So with all of that, I'm predicting that price is going to break out of this trend channel and it's going to reverse off of that 100% projection. Which you can see if you now take a look at the GIF, you can see that's exactly what happened. It broke out, headed upwards as we expected from the bullish divergence, and is reacting off of that resistance level now. Okay, another example. Okay, another example here. Okay, from the lines that I have highlighted, price made a lower low, whereas our stochastic is giving us a higher low. And if you see closely, I am actually using a Ichimoku in the background as well. So price is moving below the Ichimoku cloud. And so from the bullish divergence, I'm expecting that price is going to rise. You can take a look at the GIF, and price did break out of the Ichimoku cloud and headed upwards as well. Okay, that's it for my slides. Okay, let me just pull out my charts and we can do a bit of chart analysis where we highlight some divergences and hidden resistance and support levels. Okay, let me know if you guys have any questions as well. Okay, yeah. Okay, let's go ahead and start off with British pound first. See if we can identify any levels. So we like to start off by looking at the higher time frames first, so that so that we can see if we have any um uptrends or downtrends, just to get a general idea of where price is headed towards. So on our weekly time frame, price is moving upwards. Okay, I think we have an ascending trend channel here. Okay, on our daily time frame, um, prices are kind of ranging a bit more. Okay. um, okay, so on our daily time frame, prices are kind of ranging. So let's go ahead and add some support and resistance levels first. So this would be my first support. It is my first support level, and then my first resistance. And then my second resistance probably up here. Okay. So I'd like to try and pull back to see how far it will go without cutting too many the bodies of candlesticks. If you cut the wick of the candlestick like what I've done here, that's fine. But yeah, this is just so that we can see how many times price has reacted off of those levels, so that we can see how significant those levels are. Okay, so let's start off here by looking at to see if we have any stochastic or RSI levels. Um, okay, I think here we do have a hidden resistance. Okay, we see prices on our stochastic touching this resistance level. But if we look at the peaks where I'm highlighting now, you can see that price has made several different highs. So in this area, price has made a higher high. In this here area, it's made a lower high. So this suggests that price might continue to move upwards. You can see it's moving upwards now, back towards our resistance, before it might reverse back down again. But for now, it still looks pretty bullish. Let's take a look at our 4-hour time frame. So these tend to change. Your divergence levels tend to change with the different time frames. So it's important to pick your charts first before you go ahead and get started with that. So here you can see that is this? Mm, okay, you can see that there is a bit of a resistance here as well. Okay, so I'll highlight this level as well as this level. You can see that there is quite a huge difference between the two vertical lines that I've indicated. Okay. Okay, I see we have some requests for gold and Bitcoin. So yeah, let's go ahead and do that now. So starting off with our higher time frames again, you see prices moving in an uptrend. Okay, for gold, yeah, we do have an ascending trend channel. On our daily time frame, um, Okay, there's no ascending trend channel, but I think we can all agree that it is moving in an uptrend. Um, okay, no. Okay, so let's go in with our support and resistance levels again. So this is always the first step. So I'm putting my first support here. And my second support up here. Or rather my first resistance up here. And my second support just below here. Okay, now we support it with Fibonacci levels. So I'm going in with a retracement. So for retracement, we use these 5 levels. Okay, you can see that my 38.2 lines up with my first support. So I'm just going to keep that. Okay, as for my projection, my 61.8 lines up as well. Okay, lines up with my first support. Okay, and so does my 100% actually. Okay, now I think that's all the Fibonacci levels we had. So now we go in with some indicators. So I'm going in with Ichimoku and MACD because at one glance you can see exactly what the indicators are. So price is moving below the Ichimoku cloud, so it's giving us a bearish signal, whereas MACD is giving us a bullish signal. Now let's take a look at some more indicators. I'm going to start off with stochastic. Okay, stochastic, we do have a hidden resistance level here. Okay, and okay, so I'm just gonna highlight the areas where price touched that resistance. And you can see that price made a higher high here, whereas price was consistent at this resistance level there. Okay, and you can see there is a resistance level here, but price actually dropped. So over here we have another divergence over here. Okay, so price made a lower high. Okay, so this is actually a bearish divergence. So we could actually be seeing price continue to drop. So I'm going to get rid of our MACD. Okay, so let's see if there are any other indicators that support that. Bollinger is not telling us much. Um let's look at RSI. Okay, RSI isn't telling us much either. Let's look at our MA cross. Okay, price is moving below the one of the indicators, so it is giving us a bit of a bearish signal, but there is a cross here as well. So here you see prices moving upwards. The cross basically means that there is a trend change. So we could be seeing price drop as well. Yeah, I think that's about it. And we have some more requests. So let me just check. Okay, Bitcoin. Okay, first things first, for our Bitcoin, we see that it's moving in an uptrend. Um, I can't really indicate any support or resistance levels here. So I'm just going to pull out some indicators to support that it's moving in an uptrend. So we have MACD, Ichimoku price is also moving above. And Bollinger Bands, you see price is moving way above the upper band of the Bollinger Band. So it suggests that it's going to continue to move upwards. Also we have stochastic. Mm, okay, stochastic isn't telling us much. But yeah, so from these indicators, you see that price is definitely continuing to move upwards for Bitcoin. Okay, and then pound yen. Okay, so on our weekly time frame, price is moving upwards. On our daily time frame, it's also moving in an uptrend. Okay, good. Okay, so on our 4-hour time frame, I'm gonna indicate my first resistance up here. And then my first support here at this swing high. And maybe here as well. Because this is an overlap level. Okay, so here I have what we call a Nike tick. So for Fibonacci extension or Nike tick, we use these two levels. Okay, and you can see that my 161.8 lines up nicely with my first resistance. Okay, next I'm gonna look for retracement as well. So those same 5 levels that I used earlier. Okay, so my 78.6 lines up, and my, what is that? 38.2 also line up. Okay, in case you can't see where the Nike tick is, let me just draw it out really quickly. So yeah, that's what it looks like. I think we have another Nike tick here, a bigger one. So I'm gonna see if we can find any levels from there. Okay, my 161 also lines up nicely. Okay, so we are looking at price heading towards our first support. Um, so let's see if we can find any levels to. Okay, wait, let me highlight this. So because there are quite a few levels over here, that's why I want to highlight it here as well, because it's a confluence area now with about 3 Fibonacci levels as well as an overlap level over here because we have price reacting off of this level multiple times. Okay, let's look at some indicators as well. Okay, price is moving above the Ichimoku cloud. MACD is giving us a bearish signal. So when your indicators don't match out in terms of signals, you can always pull out some more indicators that you know how to use and that you're comfortable using. so that you can find one that supports your analysis. Okay, for Bollinger Bands, you can see that price is peaking below the bottom band of the indicator. So I'm going to remove our Ichimoku because it doesn't support our analysis. Let me look at RSI and Stochastic. Okay, so for Stochastic, we see price heading towards this support level here. No. Okay, but basically this level here is over here. So you can see price heading towards this level on our stochastic. So we can typically expect the same. We can expect price to continue to drop as well. RSI isn't telling us much again, so I will move that. Let's look at moving averages. Okay, so for our EMA, you can see price moving below the indicator SMA as well. So for both of these indicators, you can see price is moving below them. So it is giving us a bearish signal as well. Okay. Okay. If that's all, then that's it for today's webinar. Thank you guys so much for joining me. I hope you guys found it helpful. And have a great rest of your week, and I'll see you guys next week. Bye, everyone. Thank you. Thanks, everyone. See you guys next week.